Fintech stocks have had a very rough 2 years, with some popular stocks including PayPal, Adyen, and Block down more than 70 to 80% from their all-time highs. I've covered PayPal and Adyen in this channel before, so you can check those videos in the description box below, but today I want to talk about Block. Recently, the stock dropped nearly 50% in just a matter of months, which begs the question, is it the right time to buy Block stock? That's what I'll be discussing in today's video, and as always, you can find the link to my article in the description box below. And with that out of the way, let's jump right into the video. So a little bit about the company. Block is a fintech holding company which consists of 3 major fintech platforms. First, we have Square, which offers an all-in-one platform for businesses to streamline business operations, including payment processing, customer engagement, workforce management, and digital banking. In essence, Square represents the seller ecosystem. Then there's the Cash App, which represents the consumer ecosystem. Cash App was originally launched as a peer-to-peer platform but has since grown into a digital banking offering for individuals to manage their finances, such as sending money, investing in stocks and crypto, as well as borrowing money. As you know, both the Square and Cash App turned out to be a huge success. However, they were still operating as 2 separate ecosystems, and to unlock maximum value for both sellers and merchants, management needed to somehow connect these 2 ecosystems together, and that's where Afterpay comes in. So in January 2022, Square completed the acquisition of the buy now pay later platform Afterpay for $29 billion, which according to management serves as the connection between the Square and Cash App ecosystems. And it made a lot of sense since Afterpay has a marketplace business model that not only connects merchants and shoppers but also has the buy now pay later fintech application to it. And all together, Square, Cash App, and Afterpay form Block's ecosystem of ecosystems. And that ecosystem is growing quite rapidly. In Q2, revenue was $5.5 billion, which is up 26% year over year, but keep in mind that total revenue includes Bitcoin revenue, which was $2.4 billion in Q2, or 43% of total revenue. Now, this is one area that I don't like about Block's accounting, since Bitcoin revenue is volatile, unpredictable, and low margin, and as you can see, revenue growth has been volatile in the last few years, largely due to the rise and drop in Bitcoin's market price. As such, I like to see revenue excluding Bitcoin instead, which paints a clearer picture of the underlying performance of Block's ecosystem. That said, revenue ex Bitcoin in Q2 was $3.1 billion, which is up 20% year over year, and as you can see, growth has slowed down steadily over the last few quarters, likely due to the law of large numbers, as well as weakening macro environment as a result of high inflation and rising interest rates. But let's take a closer look at growth by ecosystem, and keep in mind that the financial results from Afterpay have been distributed equally to the Cash App and Square segments. That said, in Q2, Cash App revenue was $3.6 billion, up 36% year over year, and Cash App revenue ex Bitcoin was $1.2 billion, which is up 39% year over year. Growth in Cash App was due to inflows of $62 billion, which is up 25% year over year, Cash App business GPV of $4.9 billion, which is up 15% year over year, and monetization rates of 1.44%, which is up 16 basis points year over year in Q2. Of this $1.2 billion of revenue, Cash App subscription and services-based revenue was $1 billion, which is up 43% year over year. So growth for Cash App is really strong, and this indicates more customers are joining the platform and that customers are using more of Cash App's financial services products such as instant deposit and Cash App card, which is great to see. On the other hand, the Square ecosystem generated $1.9 billion of revenue in Q2, which is up 12% year over year, and growth was primarily due to Square gross payment volume of $54 billion, which is up 12% year over year. But you'll know right away that the Cash App ecosystem is growing much faster, more than 3 times faster in fact, than the Square ecosystem. So here you can see that Square revenue growth has been on a steady decline, and if we look at Square GPV by seller size, we can see that the smaller sellers, or those with less than $125,000 of annualized GPV, grew only 8% year over year in Q2 compared to 11% growth for mid-market sellers and 17% growth for the larger sellers. And I think it's no surprise that the smaller sellers are under more pressure than larger sellers since they are more vulnerable to rising interest rates and high inflation. Nevertheless, the slowdown is quite concerning, which is probably why Square CEO Alyssa Henry left the company after 9+ years with Block. Regardless, Block continues to show strong growth in a challenging macro environment. While slower than usual, Square should maintain steady growth over the next few years as it continues to dominate in point-of-sale technology. In addition, Cash App is still growing rapidly as digital banking and digital wallet adoption increases with each passing day. And with the integration of Afterpay, Square and Cash App should enjoy powerful network effects as more merchants and consumers transact in Block's all-in-one closed-loop financial ecosystem. In terms of profitability analysis, I will do things a little bit differently. I will show you Block's margins on a GAAP basis as well as margins excluding Bitcoin revenue as if the company does not offer Bitcoin trading on its platform. For example, here you can see GAAP gross margin, which is gross profit divided by total revenue, and then I've also included gross margin x Bitcoin, which is gross profit x Bitcoin divided by revenue x Bitcoin. And this way we can truly see whether profitability is improving or not without the volatile impacts of Bitcoin revenue. That said, Q2 gross profit was $1.9 billion, growing 27% year over year, which represents a 34% gross margin. On the other side, gross profit x Bitcoin was $1.8 billion, growing 28% year over year, and this represents a gross margin x Bitcoin of 58%. As you can see, gross margin x Bitcoin has been steadily improving over the last few quarters, which shows economies of scale within the business. If you focus solely on GAAP gross margin, you wouldn't be able to make the same conclusion. So gross margin x Bitcoin continued to improve due to the fact that Cash App is growing faster than Square. And as you can see, Cash App gross margin x Bitcoin is about 80% while Square has a gross margin of just 46% in Q2. It's also great to see that Cash App gross margin remains stable and Square gross margin improved year over year from 44% to 46% in Q2. Moving on, Q2 operating income was negative $132 million, which represents a negative 2% operating margin. Q2 adjusted operating income was $25 million, which excludes non-recurring items such as acquisition-related expenses, Bitcoin impairment losses, and amortization, so it's great to see that it is positive. Finally, Q2 net income was negative $126 million, while adjusted net income, which adds back non-cash expenses like stock-based compensation, was $247 million. So not much to talk about here, but Block is still unprofitable on a GAAP basis. That said, Block seems to be gaining economies of scale as seen from its improving gross margins. On the other side, the company has yet to display operating leverage as the company's bottom line remains negative. But hopefully we can see GAAP profitability soon, which I think is going to be a major catalyst for the stock. Turning to the balance sheet, Block has $5.9 billion of cash and short-term investments with $5.3 billion of total debt, placing its net cash position to be about $0.6 billion as of Q2. As you can see, Block's net cash has been improving over the last few quarters as the company has been deleveraging its balance sheet, which is smart given the macro situation today. In terms of cash flow, Block produced $84 million of free cash flow in Q2. In the last 12 months, free cash flow was $322 million, which is only a 3% free cash flow margin against revenue x Bitcoin. Although not impressive, at least Block is not burning cash. Nevertheless, I would love to see free cash flow improve as the company scales further. In terms of outlook, management expects July 2023 gross profit to grow 21% year-over-year, which is quite a deceleration from Q2's growth of 27%, so this is quite disappointing. Management also added that gross profit growth is expected to be relatively consistent through the third quarter, which is another way of saying that Q3 gross profit is expected to grow by 21% year-over-year. On the bright side, management raised their 2023 outlook on both adjusted EBITDA and adjusted operating income by $140 million for each figure. So management now expects at least $1.5 billion of adjusted EBITDA and $25 million of adjusted operating income, which is great considering that they previously expected this metric to be negative $115 million. And the reason for the raised guidance was the company's gross profit momentum in Q2 as well as expense discipline in the first half of the year. With that in mind, the market still didn't like the fact that gross profit growth is expected to slow down even more, which is probably why the stock sold off after Q2 earnings results. Whatever it is, Block still has a long growth runway ahead as digital wallet adoption continues to increase and modern payment processing continues to grow. For one, US retail e-commerce sales is expected to expand to $1.6 trillion by 2026, which represents 20% of total retail sales, and this should be a nice tailwind for Square. Additionally, digital wallet adoption is expected to increase to 5.2 billion users by 2026, up from 3.4 billion in 2022, and digital wallet transactions is expected to hit $16 trillion in 2028, which is a 77% increase from 2023. And being the number one digital wallet offering today, I think Cash App is well positioned to capitalize on this market opportunity, so it's safe to say that Block's growth story is far from over. Now, if we look at the company's valuation, we can see that Block stock has lost 80% plus of its value. It was trading as high as $280 back in 2021, but has now come down to just $45 a share as of this video, which is very close to its March 2020 lows of about $32 a share. So after rallying 700% plus, Block stock is back to where it was, back to square one, and I think the stock is trading at major support, which means that it may be a good time to buy the stock. Today, the stock trades at just 3.8 times EV to gross profit multiple, which is far cheaper than its highs of about 50 times right here. So this is its lowest multiple ever since the company went public in 2015. So it was trading very expensively a few years ago, but now it is trading at its cheapest valuation ever, despite being a much larger and more profitable company. Now let's take a look at my DCF model, and again I'm going to remove Bitcoin revenue out of my projections, and that's it. Here are my key assumptions. For revenue growth x Bitcoin, I'm assigning a 20% growth in 2023 and then gradually decrease that rate to just 10% by 2028 and beyond. For gross margin x Bitcoin, I expect margins to continue to improve due to the outsized growth of Cash App, and so cost of revenue as a percentage of revenue will continue to decline. As such, I expect gross margin x Bitcoin to reach 60% by 2026 and beyond. I also expect the company to gain operating leverage, so operating expenses will drop to just 45% of revenue, which means that operating margins will expand to 15% in the long term. Income tax expense will be set at 20% once the company turns GAAP profitable. I will add back transaction loan and consumer receivable losses as it is a non-cash expense and it was 5.3% of revenue in 2022, so I will set it at a constant rate of 5% of revenue in my projections. And for depreciation and amortization, SBC, CapEx, and changes in net working capital, I will set them like so. And based on all these assumptions, I arrive at a $35 billion revenue x Bitcoin by 2032 at a free cash flow margin of 17.6%, which is reasonable given that PayPal's free cash flow margin was about 18% in 2022. And using a discount rate of 10% and a perpetual growth rate of 2.5%, I arrive at a fair value estimate of $95 a share for Block, which is about double the current price of $45 per share. As a reminder, this valuation does not include Bitcoin and the company's other crypto projects, which could unlock massive value if crypto and decentralized finance gain mass adoption. On a side note, smart money is piling into Block as well, as you can see right here. But more importantly, Block is still founder-led by Jack Dorsey, who is still the largest shareholder with an 8% stake of the company. Additionally, Jack Dorsey receives basically zero compensation with no performance awards as CEO of the company, which means that the only way for him to get paid is to drive Block stock price higher. That being said, Jack Dorsey has skin in the game and his financial incentives are very much aligned with long-term shareholders. The biggest risk for Block is competition. In its first half update, Adyen mentioned price competition as one of the major reasons for the company's slowdown, which caused the stock crashing 35% plus the following day. So the commoditization of payment processing services is a huge concern, and we're already seeing it happening in real time. As you can see, take rates among the big three fintech processors are all declining, which means lowering revenue and earnings potential for these payment processing companies. Not only that, but Cash App also faces tough competition from other digital wallet and banking solutions such as SoFi, Venmo, Zelle, Chime, Apple Pay, and more, which could limit Cash App's growth. The second major risk is a failed Afterpay integration. As you may know, Block acquired Afterpay for $29 billion, which is now larger than Block's market cap of $28 billion as of this video. So it's safe to assume that Block really overpaid for Afterpay, causing serious shareholder value destruction. In addition, the Afterpay integration may not bring the desired network effects that management is looking for, which again is going to hurt investors. So to wrap up this video, Block is building the financial ecosystem of tomorrow, which includes a best-in-class payment processing platform as well as a top digital banking app connected through a buy now pay later marketplace. While growth is slowing down, Block still has a long growth runway ahead due to multiple financial megatrends including e-commerce, digital wallets, and digital banking. Following the huge sell-off back to its COVID lows, Block stock now trades at a wide margin of safety near a major support, which could mean a high upside potential for investors. The stock is back to square one, but the business is much larger and much stronger, so I think the sell-off might be overdone. While I'm bullish on the company, I won't be buying the stock as I already have exposure to Block through my investment in Marqeta, which powers the Cash App and Square Card. So if you're interested in watching or learning more about Marqeta, you can click in this video right here. Otherwise, that's all that I have for you today. If you enjoyed this video, please leave a like, comment, and subscribe to my channel for more investment content. As always, I appreciate you and I hope you have an amazing day. See you guys on the next video.